by Green Lamb Laminates. हर गुस्ताखी साफ.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. The rupee reverses early strength, falls to a new low of 79.97 versus the dollar. It's a second straight week of fall on worries of persistent forex outflows. Indices rally to one-week high. Sensex surges over 750 points. Nifty ends above 16,250. Monsoon session of Parliament underway. Finance Minister Nirmala Sitharaman tells Lok Sabha that a ban of cryptocurrency would not be viable without international collaboration. This comes even as the RBI pushes for a complete ban on the asset. Finance Minister Nirmala Sitharaman tests positive for COVID, seen voting for the presidential elections in full PPE kit. Union Power Minister R.K. Singh also suffering from COVID-19. Reliance Jio signals massive intent on 5G front with earnest money deposit of 14,000 crore rupees, 2.5 times that of Bharti Airtel. Adani Data Networks deposits just 100 crore rupees, indicating it may only bid for lower price spectrum. Frequent technical malfunctions in aircraft of various Indian airlines attract government attention. Aviation Minister Jyotiraditya Scindia individually meets airline chiefs, asks them to ramp up safety measures. Scindia had met top officials of the aviation sector regulator, DGCA, yesterday. Chinese banks stare at NPA crisis as thousands of home buyers across the country stop making mortgage payments for delayed and stalled projects. Officials in damage control mode consider temporary waivers after payment boycott. After making gains earlier in the day, the rupee tumbled yet again, depreciating 15 paise, just shy of touching 80 now. The Finance Ministry today holding global factors like the Russia-Ukraine conflict, soaring crude oil prices and tightening of global financial conditions responsible for the weakening of the Indian rupee. On the other hand, markets started the week on a strong footing. Benchmark indices surging about 1.5% to see the best closing levels in nearly 6 weeks. Sensex was up 760 points and Nifty up 200 points, shutting shop above 16,200. Hectic buying was seen in beaten down private banks and IT shares. Hindalco, Indusint, Infosys, Tech Mahindra, Bajaj, Finserv, some of the top gainers in trade today. On the downside, Dr. Reddy's Labs, Britannia, HDFC Bank, M&M and Nestle, the top blue chip laggards today. Joining us now, our global business editor, Udayan Mukherjee, for his take on all to track when it comes to markets this week and the cues that are top of mind. Udayan, what's it looking like this week?
Well, markets are consolidating, Abha. I mean, that's very clear for the last few days. It's not going up too much. It's not going down too much either. I mean, you saw last week towards the end, we did make a dart towards the below 16,000 level on the Nifty once again, but it did not hold there. Again, there was buying at that level and the markets bounced back. Conveying the impression that it's not quite done yet, maybe with the pullback that started around 15,200. So we went up to around 16,200 kind of levels, had a 300-point kind of a pullback, and now we've come back to those kind of levels again. So I think the best word to describe this is consolidation. It's a kind of a trendless market at this point in time. As we discussed last time, it appears that the market might have exhausted the weakness for the moment because, you know, it was a one-way kind of a fall on that way, all that way down to that 15,000 level. And having come back from there, I think the market's just about treading water. There is some sense of hope once again in the market, and has been some buying at lower levels as well. And now I guess we'll just wait through the earnings season and see how it goes. I mean, the first couple of earnings have not been great, but they've not been disastrous either. I mean, from the big names like TCS or HDFC Bank, they've been par for the course with minor downgrades kicking in, particularly for TCS. So we'll see as the earnings season progresses further whether there is room for the market to go back to below 16,000 levels, or it's possible that we can hang around here for a few weeks and then wait for the global cues to determine whether there is more downside from here. But for now, I don't think there is anything special which has happened over the last few days to warrant a kind of a trend call for this market. I think we're just about consolidating.
The markets have been in volatile territory for some time now. Will this fall continue as central banks continue to hike interest rates? We spoke to Andrew Holland, CEO of Avendus Capital, on the effect of the central bank's actions globally and particularly on economies in the US and India.
It's been a bad market for nearly a year now. But where are we now in this bear market, you think? I mean, it's been pretty orderly so far as these things go. But do you see the prospect of things getting uglier as we get deeper into the year?
Well, first of all, Udayan and Abba, it's a pleasure always, and takes me back to our old times. But so it's a pleasure for me. Thank you. Could it get uglier, Udayan? The answer is probably yes, and I think the reason behind that is that we're still into that tightening mode. For the central banks globally. And, we don't know what the unintended consequences of that might be. You've had liquidity, streaming around for the last few years since COVID. So there could be some, things that have been hidden under the carpet, which we don't like once liquidity starts to dry up. And, if you look back at what happened in China, when they tightened in 2021, the outcome of that was obviously this big problem now in the property market. So maybe there's some unintended consequences. Maybe some of it's played out already, say in the crypto world, where we've seen obviously some big defaults there. But I'm still worried about the credit markets as the Fed reduces its balance sheet. And let's not just concentrate too much on the Fed. There's also Europe, which is really spiraling down into a recession. And if Mario Draghi, does resign in Italy, then that will have other consequences for the bond markets in Europe. But the big thing, the big message from Europe is that the powerhouse Germany is not the powerhouse anymore. So if that's faltering, the rest of Europe is probably going to feel a lot more downward swift from that. So that's the problem. And Udayan, whilst we talk about central banks increasing rates, it's going to be different for each country. For the US, really inflation is a lot of it's in the housing market. So they really have to bring down the aggregate demand in housing. Say in India, ours is more food inflation. So we have to look at food inflation and energy inflation. Same for Europe. So I think every central bank will have its different approach to this, which will bring its own volatility and downward risks.
Now, when you speak about unintended consequences, Andrew, but is it the macro that you're worrying about, or do you think there is a micro event risk? Is that what you're alluding to? Because, if you look back in the day to 2008, the macro was bad, but it was a micro event like Lehman, which actually led to the undoing of the market. Do you think as central banks tighten further and the growth concerns become larger, there could be any micro event which is lurking there, which could come as a surprise, which the market has not priced in already?
So I think there's two parts to that, Dave. One is, first of all, this is an economic recession. And probably me and you talked about this in 2000, but I don't think many people remember what an economic recession is really all about. So that's the first point. The second point is 2008 was a financial economic downturn, not an economic recession, although it caused some problems in there. So I think when the Fed increases rates, it's really the credit markets, which you could have some problems with. And that's where the micro risk comes from. And obviously, if that then spills over to the bond markets and the currency markets, you get further volatility. And that's where the unintended consequences happen. And of course, when that further exacerbates the problem about economic growth, and therefore earnings forecasts, which are still very high, in my opinion, globally, will have to be reduced even further. So that's what the market is probably not pricing in at the moment. I think the market's pricing in all the things that you've talked about previously in terms of high inflation, what central banks are going to do. But these unintended consequences, I don't think the market's yet pricing in. It's more the Goldilocks scenario for the time being.
So, Andrew, in the light of this and in the current context, I mean, firstly, India seems to still be faring okay. We did see some numbers come in last week suggesting that perhaps retail interest is now looking a little shaky. Does that change the scenario for India at all in your books?
No, I think the retail, you're talking about the retail investor, Abhay, right? In terms of the retail investor, it's been pretty resilient, actually. It's been, I suppose, surprising to us all in that respect. I think, though, one of the things that was mentioned at the beginning is that no one's made any money in the past, I think, probably less year and a half now. And particularly if you're below the kind of index, you're definitely losing money. So I think patience will run out, particularly if there's another downturn in the market. I think that will shake out quite a number of retail investors, from where they are today in terms of, doing their kind of investments. I think what we've seen in the last 6 months, depending on kind of which tweets you look at, a lot of people were making money in options and trading, and that's really kind of disappeared now. I think people have lost quite a bit of money on both accounts, and I think the message went from I can't, I'm making lots of money to when will the market stop falling. So I think that's where we've moved to. Which isn't a bad place to be, but I think any more downturn in the markets will probably have these investors, run to the shelters.
From an absolute point of view, Andrew, how much downside do you see to this market? Because, I mean, as I was saying earlier, this has been fairly orderly. Of course, mid-caps have fallen 30% in many cases. But if you look at the headline index, which is still a very large part of the overall market cap of India, but the fall is barely 15-18%, which for a bear market is very low. Do you see a possibility of another 10-15% kind of an index downside before the year is out, or before we get to that October period you're talking about?
So if we had another down leg for whatever reason, Udayan, and let's say that takes global markets down, our feeling is that the S&P is probably maybe 10%, could see another 10% fall. We think our market could probably take a 5% fall. So we're around that 15,000 Nifty level. Now, obviously, they'll all be, it could overshoot on the downside as well. But I think anything towards 15,000 is a good time to deploying cash. And one of the things we've been doing throughout the year and saying is that, expect volatility, and therefore cash as an asset class is not a bad place to be. When you have a lot of volatility, it's always good to have money ready to go back into the markets rather than taking volatility in the short term. So I think we're moving past that phase. There could be, as I said, one down leg to the markets if some of those unintended consequences we talked about do appear. But if not, we will be in 6 months' time. I think we'll be higher than we are today.
And you can catch the entire interview on businesstoday.in as well as our YouTube channel. Let's take a very quick break on that note. Back with more news on the other side.
शतरंज को दिमाग का खेल कहा जाता है। शतरंज के बारे में ये भी कहते हैं कि यहाँ सब कुछ काले और सफेद में है, ठीक वैसे ही जैसे सच और झूठ। शतरंज की इस बिसात में मेरे नए शो का नाम भी छिपा हुआ है। ये आपके लिए एक हिंट है।
सही गेस करने वाले पहले 1000 दर्शकों को मिलेगा 1000 रुपए कैश प्राइज जीतने का मौका। तो अपना जवाब अभी व्हाट्सएप कीजिए 8657900895 पर।
Musk, there's clearly $1 billion breakup fee, probably punitive damages. There's a lot of legal issues that they need to navigate, but it's going to take time to go through that. And battling the richest person in the world is not exactly where Twitter's board expected themselves to be in Delaware court going into the fall. And it's one of the craziest business stories ever. And I think it started off as a circus show, and it's ending as a circus show.
You are watching India Today.
Welcome back. The Indian government is seeking global collaboration to control the proliferation of digital assets, including cryptocurrencies. In a written reply in Lok Sabha, Finance Minister Nirmala Sitharaman said that the RBI has recommended for framing of legislation on this sector. The RBI is of the view that cryptocurrencies should be prohibited. She went on to add that cryptocurrencies are by definition borderless and require international collaboration to prevent regulatory arbitrage. Karishma joining in with more details.
Well, Finance Minister Nirmala Sitharaman reiterated RBI's words on cryptocurrency, and the word that stands on its strong stance since the beginning is the word prohibited, because government has made it clear that as per RBI's recommendations, they think cryptocurrency should be prohibited by the Indian government. And this also again brings a whole kind of jeopardy with the way the regulation on cryptocurrency that has been awaited, especially the fact that Finance Minister had imposed 30% tax on transactions related to virtual digital assets in the last budget. In fact, in her written reply in today's Lok Sabha session, she also said that RBI is of the view that any kind of modern currency cannot be considered until and unless it's issued by the central bank, and that which coordinates with the regulations of the Indian economy. Well, the Indian government is in fact waiting to hear from its global counterparts to understand what kind of global regulations are needed.
In a move which will spell trouble for the online gaming industry, finance ministers from 7 states will meet later this week to finalize the levy of GST on the sector. Tax on online gaming, casinos and horse racing can be hiked from 18 to 28%. Karishma joining in with more details. Karishma, what are you learning from your sources?
Well, this is the second consecutive meet of GST group of ministers on online gaming, and the ministerial panel, as per our sources, is set to meet on 23rd July in Bangalore. Now, this is going to be the moment where they will have to take a final decision before the report is submitted to the GST Council, which is likely going to be held in August. Now, last week, the meeting had resulted in an inconclusive decision because the ministerial panel was awaiting intervention of law committee in order to discuss and define the legality of the change that they are about to bring. As per our sources, it is likely that all the ministers of the panel have suggested a hike to 28% when it comes to online gaming, and after a further review, a final decision once taken will only come into action if the council considers it after the acceptance of fitment committee for the 48th GST council meeting.
Customers will have to pay more on certain products and services from today as a series of decisions by the GST Council take effect. Certain items are set to attract GST, while the tax outgo on certain things are set to come down. My colleague Sakshi Batra joining us with more details.
Well, that's right. The common man, already reeling under the inflationary pressures, will have to shell out more for food, for hospital rooms, hotels and much more, with the proposed GST rate hike coming into effect from today. And here's what will get expensive for you and me starting today. Now, our kitchen budgets are all set to be hit yet again, as the single packages of, say, cereals, pulses, flour weighing up to 25 kilograms will be liable to 5% GST starting today. Also, pre-packed, pre-labeled curd, cottage cheese, lassi and buttermilk will now attract GST of 5%. Earlier, these were exempt from GST. Other household items like the LED lights, the fixtures are all set to see a price hike, as these will also now attract 18% GST tax. Now, solar and water heaters will now attract 12% GST from today, from 5% earlier. The printing, writing, drawing inks, pencil sharpeners, blades and cutlery would all now attract 18% GST instead of 12%. Hospital room rent rent of the non-ICU rooms exceeding 5,000 rupees per day will be taxed at 5%. Previously, it was 0. The GST Council has also decided to bring hotel rooms under with 1,000 rupees per day under that 12% GST slab as opposed to 0 earlier. Now, you may also rethink buying diamonds, as cut and polished diamonds will be taxed at 1.5% compared to 0.25% earlier. Other than this, we've seen that 18% GST will be levied on the fee charged by banks for the issuance of checks, up from earlier 0%. But not all is bad news right here, because we've seen that the electric vehicles will get cheaper starting today due to a reduction in the GST on batteries from 18% earlier to 5% now. Also, tax on transport of goods and passengers by ropeways would now decline to 5% from 18% earlier. Renting of trucks and goods carriages will also get cheaper, as GST is reduced here to 12% instead of 18%. GST on astronomy appliances on several orthopedic appliances has also been reduced from 12% to 5% now.
The nation's largest stock exchange, the NSE, all set to get a new chief this November. Ashish Chauhan will take over as the MD and CEO of the National Stock Exchange after his current tenure at the rival Bombay Stock Exchange comes to an end. The appointment has been cleared by markets regulator SEBI. Chauhan, incidentally, was part of the founding team of NSE in the early 1990s. The veteran manager will, however, face formidable challenges, with the exchange embroiled in the co-location scam and another related to illegal sharing of information with an alleged Himalayan yogi. The exchange is also facing flack over technical glitches in its trading system. All these factors have delayed a much-anticipated IPO of the exchange, a task which now falls to Chauhan to expedite. British Prime Minister hopeful Rishi Sunak has, in a very rare moment, effusively praised his father-in-law and Infosys co-founder N.R. Narayana Murthy. In a debate with other PM hopefuls, the former Chancellor of Exchequer recounted how Murthy used his wife's savings to build a worldwide infotech empire.
There is commentary about my wife's family's wealth. And so let me just address that head on, because I think it's worth doing, because I'm actually incredibly proud of what my parents-in-law built. My father-in-law came from absolutely nothing and just had a dream and a couple of £100 that my mother-in-law's savings provided him. And with that, he went on to build one of the world's largest, most respected, most successful companies that, by the way, employs thousands of people here in the United Kingdom. It's an incredibly conservative story. Actually, it's a story that I'm really proud of.
Okay.
And as Prime Minister, I want to ensure that we can create more stories like theirs here at home.
And as we come to an end on the show, take a look at Maruti's micro SUV Espresso. The company has relaunched with a new refined engine and higher fuel efficiency. The vehicle now sports the next-gen K-Series 1.0-litre engine with idle start-stop technology, prices ranging between 4.25 and 6 lakh rupees. That's all from us tonight. Thanks for watching.
Everyone's busy finding what's trending. You're busy finding out why. India Today, for those who research before reacting. Download the India Today app now.